to the cloud. That's going there. So great. Welcome, everybody, to today's session on how to manage and forecast your cash flow in a COVID world. This is a Zoom webinar. Now, I recognize so many of you from previous webinars we've done, but this may just be your first time interacting with us on a Zoom webinar. So I'm going to take you through a couple of things about the way we work here. You'll see some 3 buttons probably in the middle of your screen. There might be a couple of options for places, but they're important buttons. One of the ones is the raised hand. So that raised hand button in the middle is how you let me, I'll be handling things in the background, know you've got some technical issue or you need some sort of help. So if you click that button, it raises your hand. I can see that that hand is raised, and I'll reach out to you using chat and check what you need. In fact, why don't we just check everybody that's working? So if you could all find that raised hand button and press it, and I should see a whole bunch of raised hands going up. That's it. That's what I like to see. All these folks know what they're doing. So I'm seeing like 25, 30. Yeah, excellent. All right. So when you press it again, it lowers your, so when you press it, it changes from raised hand to lower hand. And when you press it again, it lowers your hand. And if you don't do that, we can do that as well. If you have questions from today, please put them into the Q&A. So that Q&A section allows us over there to the right of the raised hand, opens up a little button, an option there where you can, a dialogue where you can type in a question. And those are questions for Paul. And we will pause every so often to check for the questions. And most of them will probably hold off to the end because some of those will be more generalized. Anne Johnson-Stromberg, who's the Associate Director for Programs for the region, I got it right, and my boss, so I should have got it right, will be handling Q&A and triaging them, so they will be able to spend, so she'll be passing those out as needed, and we might occasionally even give you a direct answer online. The chat section, please don't use that for questions. Use that to contact me or to respond. If Paul does send out a question, so like, everyone please put in the chat, tell me where you are today. Then everyone can put the response in the chat and we can see that. And I'll let Paul know what all the people who are responding and what they're saying. If you do that, so when you have a choice there, whether you're sending it to all panelists or all panelists and attendees, and I think that might only be able to go to all panelists, actually, the way this is set up. So if you want it to come to just me, send it to all panelists, and if you have the option of all panelists and attendees and you want everyone to see it, do that. All right, so that's all about how you interact with us in Zoom. I'm now going to hand over to Anne Johnson-Stromberg, the Associate Director, who will talk a little bit about SBDC and then hand over to Paul.
Great, thank you. Thank you all so much for joining today. We really wanted to put together some trainings that would help people get back on their feet after all that everyone's gone through with COVID, and develop some really great tools and have amazing advisors throughout the SBDC network that can help you on a one-on-one basis with some of the topics that we're going to discuss today. But some of the things that the SBDC helps with include capital conversations, obviously, access to loans, growth, marketing, financial management, and we're very proud of our organization that is funded by both the Small Business Administration and the state of California to deliver free one-on-one technical assistance to clients, small business owners, and free or low-cost trainings as well. And that's something that, you know, we really pride ourselves on. Confidentiality is guaranteed, and we are always looking to be responsive to the needs of our clients. And so the flavor of every small business development center is a little different depending on where you're located, so that it can be answering to the needs of the local community there. We are doing a regional webinar. We have a large territory. The NorCal SBDC network spreads from the Oregon border to about an hour past Stockton, all the way over through Santa Cruz County. That's 36 county territory, has more than 20 SBDC programs, and there's a lot of different offerings within that. So if you want to know more about the SBDC, please go to our website at norcalsbdc.org. You can find a local service center in your area by typing in your zip code. And just so that you know, the types of things that the SBDC is paid to do is to help businesses get started, to create and save jobs, to increase sales, and to help clients access capital. That's the function of our program and what all of us are striving to do with our one-on-one consulting as well as advising. So just wanted you to have a little background on our SBDC program. With that, I'm really happy to introduce Paul Bozzo. He's a regional advisor for our SBDC program. I've worked with him for a long time. Definitely been with the SBDC for 10 plus years and brings a lot of experience and he's similar to the majority of our SBDC advisors throughout the network, in that we are all serial entrepreneurs ourselves and have kind of walked you know, a mile in your shoes. And I think that has made a huge difference in the type of information that we share and the type of perspective that we have in our approach with clients. So without further ado, thank you, Paul, for teaching this training today.
Great, thank you, Ann, and welcome everybody. As Ann mentioned, my name is Paul Bozzo, and I'm an SBDC Regional Advisor. And let me just do this. I'm going to share my screen really quick so I can start the presentation. All right, good.
There have been a couple questions about the presentation. You will all receive a copy of the slides, and this will be available on what website will the recording be available?
It will be available on our YouTube channel. I'll be putting information about that up a little later. But yes, if you go to youtube.com/AskSBDC, that's our YouTube channel, and this will be there probably by the end of the day. But most also, we will share with all the people who attended today a link directly to that as well. And I put in the chat a link to somewhere you can download these slides from if you want them now.
And Alan, can I get a quick video and sound check and screen check?
I can hear you, I can see you, I can see the agenda. I think we're perfect.
All right, perfect. Welcome everybody. Again, as Ann mentioned, my name is Paul Bozzo. I'm an SBDC advisor, and I'm happy you're here today to talk about what I think is a critical topic for small businesses. It's always been a critical topic, but it's even more pressing today, which is the ability to really understand, manage, and forecast cash flow. So that's going to be our focus of today's webinar. In terms of agenda points, there's basically kind of three big buckets we're going to talk about today. It's just some general context around the importance of understanding cash flow. And one of the main goals of today is to provide practical strategies that you can use right now, immediately, to have a positive impact on your cash flow position. And then lastly, we'll end with an overview of a cash flow, kind of a custom proprietary cash flow forecasting template that I've developed over the last couple of years. I've used it myself. I've used it with lots of clients, and it's become a very powerful tool for small businesses to forecast cash flow. So just a bit about my background and perhaps why I'm here versus anybody else is I was in first part of my career as an SBA lender. So I learned a lot about cash flow and balance sheets and loans and income statements and small businesses during my time as an SBA lender. I was a corporate consultant for 5 years, and I worked for a national company, and my job was to work with privately held companies that were scaling to go public. So I did a lot of work with the founding teams and the C-level folks on growth strategies and financial strategies. I ran an accelerator for 3 years. We were working with startup, scalable tech companies. And I've been a regional advisor for about 10 years with the SBDC as well as a private consultant. And mostly my work is all around business models and business planning and financial analysis and projections and funding. So that's my core specialty. I teach at Sonoma State's MBA program. So I teach a class on finance and strategy. And I also have an MBA in finance. So That's my background, and hopefully that provides some relevance in terms of the information I'll present. But one bit of context before I go forward is that before I was an SBDC advisor, most of my work was with large private companies that were well established, SBA lender, an MBA is it wasn't until I really started advising small businesses that I appreciated how hard it is for a small business person to take on the role of chief financial officer, as well as founder, as well as social media manager. I mean, it's an amazing responsibility that small businesses have to try to hold all those hats. So hopefully today will just be an opportunity for you to hone in on some very practical strategies to assist you as a small business owner to move forward successfully. So let's get going. March 19th, 2020. That is the exact date that the state of California public health officer declared a shelter in place. And that was the day that our worlds as small business owners and advisors changed. And that's been a while ago. So it's incredibly important to step back and realize that this was a monumental event that no one could predict, and it's had incredible impacts on small business nationally. I've been an advisor again for over 10 years. I've worked with hundreds, if not thousands, of small businesses. And all I can share is my experience over the last 6 or 7 weeks, working with 6, 7 businesses a day. The stories I've heard, the pain, the suffering, the challenges that small businesses are going through has just been incredible. You're living them. Advisors like myself are helping you work through those. I think the only ray of hope is that hopefully things are starting to open up, and there are some positives out there as well. So this seminar is all about giving you tools to survive and move forward successfully in your business. So, estimates vary. Nobody really knows, but the reality is that, according to one source, 25 to 33% of small businesses will close due to the COVID crisis. I'll let you kind of make your own estimate, but my professional opinion is that's an accurate statement. So it's a monumental occurrence in terms of small business in America. And what we're seeing is that to survive, businesses will absolutely need to fundamentally rethink their business models and adapt to a changed environment. There's a concept in Silicon Valley called pivot, and essentially it's a shift in the business strategy to test a new approach regarding a business model. And what we're already seeing, you are probably executing this right now in your own business. We're seeing this in our neighborhoods, in our cities, on the news. We're seeing amazing examples of businesses innovating. So for example, if any of you attend a yoga studio, you're being offered that virtually online. I've got several clients that have innovated new strategies, video, new service lines, new products, delivery, just brand new approaches to business. And at first, that was about survival. That was like, I got to figure out something to make some money. But now what I'm starting to hear is they're like, you know what, this is actually working. And even if my business went back to the way it was, I'm going to keep this because I found that this strategy is very successful. I actually heard that from a client that is running a yoga studio, that the virtual offerings have been so successful that even if things go back to normal, they're going to keep that. So pivot is not only just about survival, it's potentially a strategy to move forward in the future. So let's talk about cash flow. Is what really causes a business to close its doors. The actual technical event is not that you have a bad marketing strategy, or not that your website's out of date. It's not that even you have a lot of debt. It's that the bank account goes to zero. So the actual technical event that causes a business to close is the bank account goes to zero. So this whole webinar is about helping you ensure that that doesn't happen. So there's this is not my top 3 rules of doing business. I'm borrowing this from an old adage, but the #1 rule of business is never run out of cash. And the 2 and 3 rule is remember rule number 1. So cash, the management of it, the understanding of it, the forecasting of it is one of the most essential functions of any business. So every decision that is made will impact the financials of your business. And that goes from purchasing a set of staples, copy paper, some of the most minor things that a business decides it needs, to some major things like expansion or hard pivots that require a lot of capital and resources. So every decision you make will impact the financials of the business, and the very survival of your business will depend upon your knowledge of how to manage the money. In my work with entrepreneurs over the years, that's generally not an area of interest nor comfort, is really working with the money. If we think about the typical entrepreneur, they're creative, they're innovative, they're risk takers, they're passionate about their business, but they don't have degrees in accounting or finance. And so oftentimes the money is a source of, it's unfamiliar, it's scary, so I'm just not going to deal with it and focus on what I love. But I want to shift that perspective a bit and say that this is, especially now, one of the most important things you need to do as a business owner. So here's what I've learned, or a few things I've learned after working with hundreds, if not thousands, of businesses over the last 20 years, is when the money is the worst and it's the time that you just want to not deal with it, that's the time you really have to lean into it. So part of the perspective I want to leave you today is I understand, I know, and I've experienced that in my own personal life at times, is that when the money's tight, that's the last thing you want to deal with it. But now is the time to actually lean into it, to bring it closer to you so that you can understand it and make it not so scary. Make managing the money something that you become skilled at to help your business both now and in the future. So there's a lot of questions that businesses are asking themselves right now and dealing with is, when can I open? That's unfolding at various stages right now. Get back into full operation. How much business will come in? Will it be 25% for 3 months and 50% and 75%? So the amount of return to revenue and what that looks like is a very difficult question. Planning in the future is always challenging, but it becomes incredibly difficult when the variables are so extreme. So I appreciate that. How long will this all last? Months, years? We really don't know. For businesses that are brick and mortar, what about my lease? What's going to happen with that? What's going to happen with my employees? Will they come back? Will they want to come back? What's going to happen? What's going to happen to costs and other expenses? And what will happen as a result of different changes I make in my business? So there's a lot of variables, and that makes planning difficult, but all of these things can be dealt with. So what I want to move into now, that's just a bit of perspective, is what I tried to do over the last week or so when I knew I was going to be doing this webinar is I thought, okay, what are all the things that I've ever talked about in terms of small business that has helped them understand and improve their cash flow? And what's interesting as an advisor is that I've learned a lot from my clients. That's how I learn. And when you've worked with so many clients, you've seen a lot of things that don't work, and then you also see the things that do work. So I'm going to present maybe 12 or 15 different strategies, and these are all drawn from my work with clients. And these are all things that have proven themselves to work. So this is just going to be kind of a fast view through some of these strategies. So first, everything is negotiable. Everything is negotiable. But what's key in negotiation is that you are clear and specific on what you need to succeed. One of the things we talk about with small businesses is when you're pitching something or you're presenting something, you've got to be clear on what you want, and you have to have a clear and specific call to action. So as you think about all the decisions that you need to make moving forward, is realize everything's negotiable, but you've got to come to that negotiation clear and specific with what you need, down to the number, down to the date, and be prepared to understand what the other side has to lose and the other side has to gain. So for example, if you're negotiating a lease, you have to think from a landlord's point of view. Yes, they need current cash flow. So Is not paying the lease an option? No, it's not practical. Is paying 50% an option? Yes, that is, because the landlord's faced, if you leave, they've got all sorts of costs to demo, to get somebody in, carrying costs. So it's in their best interest to have you succeed as well. So that's where the negotiation starts. This is one of the most powerful things that I've shared with my clients. I do this myself. My own personal world is that what's immediate and what we can control is expenses. Revenue takes, time to develop and change. It's often difficult to reduce cost of goods, but one thing that is in your control right now is to reduce your expenses. So I'm going to offer you the 3-step mantra. I use it myself. I've taught it to my clients, and it's very successful. So first is look at all your expenses. And the number one thing is go line by line by line by line and determine, can this expense be eliminated? I think what you will find is, just like clutter in the closet, expenses tend to accumulate, and they're a little bit here and a little bit there, and you just kind of get used to them. And when you really take a step back and you really look at all the expenses in your business, I would try to eliminate everything that is not mission critical. Secondly, this is part of the mantra, is if you can't eliminate it, can you reduce it? Can you call your insurance agent and make sure that you've got the appropriate coverage that's optimized and you're not overpaying? Can you call your cable company, your phone company? Can you call everybody and say, hey, is there an option to reduce this expense? If you can't eliminate it and you can't reduce it, can you get more value out of it? So if you've got to pay $100 a month for something, can you get more value out of that expense? So the first thing I would do in a cash flow problem is go to my expenses, eliminate, reduce, or get more value out of them. And you want to start with the big ones. So what I like to do is, when looking at a typical month or my expenses, is I look at the big ticket items. So it's your rent, and it's your employees, and it's your marketing budget. Rarely the cost of copy paper is going to be the thing that's going to put you out of business. But if you have a big expense item month over month that's not optimized, that's the thing that could put you out of business. So start with your bigger line items and work down to your smallest ones. Next, you've got to play and become a master at the cash flow game. And the cash flow game has 2 simple rules. Pay at the very last moment. I don't know about you, but sometimes when I get a bill in the mail and it's not due for 3 weeks, I'm just like, I just want this out of my world. So I'm going to just go write a check now. Don't do that. Look at the date, put it in a calendar, and literally the day before it's due, the day before you're going to incur any form of penalty, that's when you want to pay that bill. So no, don't be late, pay on time, but pay at the very last moment. And then the opposite side of that game is collect fast. So your goal is to try to collect revenues in as fast a way as possible. So if it's 2 days quicker to take a credit card versus a check, grab that. The faster you collect revenues, the slower you can pay while still maintaining on-time payments. That increases your liquidity buffer, and that's the cash flow game. Next, ask for terms. I'm amazed at the amount of businesses that have never asked vendors for terms. It's common in the world that larger companies, mid-sized companies, ask for net 30 or net 45. Simply means that the vendor is giving you 30 days in which to pay the bill, or 45 days. Both are industry standards. So I would look for any particular vendor that you're working with and determine whether they're able to offer you net 30, which means that the bill needs to be paid within 30 days versus COD. Imagine pushing an expense out 30 days. That's going to increase that cash flow buffer. Be proactive versus reactive. Oftentimes when things are bad, we just don't want to deal with it. So the more that you're out front of things, the more that you're ahead of the curve, the better. If you have a problem that's coming up, it's better to deal with it now while you've got time versus wait to the very last minute. Nothing good in terms of decision making happens in a rush and happens at the last minute. So be proactive. Prioritize key vendors. This is a very scrappy strategy I've had to use with a lot of my companies that are in cash flow problems is they've got a lot of vendors. And when push comes to shove and your business's survival's on the line, you've got to determine which vendors are critical for you moving forward and which ones are great to have, but they may not be mission critical. Obviously, we want all of our vendors to be paid. They're small businesses too, but you've got to really be clear on if there's only a few vendors that can be paid right now, the rest are gonna have to wait. You've got to prioritize the ones that absolutely have to be paid for you to stay in your mission critical business. Next is offer incentives to your clients to pay early. So again, this is another aspect of the cash flow game. So you're gonna hear terms like 210 net 30. What that means is you're offering a client the ability to get a 2% discount if they pay in 10 days, or they can pay the full bill within 30 days. So give them an incentive by offering a discount to pay that bill a little bit earlier. You'll see a lot of other variations of the cash flow game. A popular one is 1 month free if paid a year in advance. My fitness facility did that. I took advantage of it. So again, these are all just strategies to try to collect money faster or to slow the payments. One thing that happens with a lot of business owners, as well as personally, is we don't like debt. We just want that to go away, right? And so you'll be making extra payments on that. In a cash flow situation, stop. Pay the minimum, pay it on time, but don't worry about principal. Principal can be dealt with later. It's to your advantage to keep the cash, to continue to work your business, let the revenues catch up, and at some point when it's available, start to worry about paying down principal. So minimum payments across the board, keep everything current, but you can deal with paying down the principal at a later date. One thing I've seen, especially with retail operations and restaurant operations, and you may have one of these loans or seen one of these loans, is what are called cash flow loans. So if you operate a business that has daily revenues through the cash register, through a POS, you're gonna have any number of companies offering you fast money, like, hey, it's approval in an hour, just send us your deposit statements last 3 months and we're gonna give you a loan. Those are the worst loans. I have an MBA in finance. I've actually torn apart some of these agreements that my clients have gotten. I couldn't figure out the actual interest rate that these clients were paying. It was only when I called up the company and reviewed their disclosures and details that you will actually see that some of these loans carry 35 up to 59% interest rate. So beware of loans that are too easy to get and too fast to get, and where you have a daily repayment or any type of direct withdrawal from your bank account on a daily basis. Those are very, very bad loans, and they make a bad situation much worse. Now, to be fair to Kabbage, Bluevine, and OnDeck, these are quality institutions. They can be good lending partners, but you want to be very choosy with the programs that you take advantage of with any financial company. Know your credit report score. This is a sample of Credit Karma. That's a company I use, creditkarma.com. They give you 2 free credit report scores once a month. And knowing your credit report score is critical because that's the #1 thing, or one of the very first things any lender or any vendor perhaps will be wanting to know. So knowing your credit report score and understanding what options that gives you for potential loans or lines of credit is very important. So I recommend everybody go to a free credit reporting agency, Mint. I like creditkarma.com. Get your credit report scores, become educated on what really those mean, and know that what options that would give you for potential loans in the future. Talk to your vendors and creditors to reduce or delay payments. This is again another element of the cash flow game. Is everybody that you do business with, everybody that you pay money to, vendors, creditors, Ask them, talk to them, let them know your situation. They all want you to succeed. No vendor does well if you don't succeed. No creditor does well if you don't succeed. So everyone is interested in you succeeding. They're interested in having you connect with them, tell them your situation and what you need, and see what options they have. If you have a lease, negotiate with your landlord. This is step number one for all of you that have brick and mortar operations. If you have not talked to your landlord and negotiated that, that would be the first step I would do. That's the largest expense. But do that from an educated point of view. So I would always contact your commercial broker or contact a commercial broker to determine the overall market rate. And just remember, the landlords need cash flow. So to just say, I'm not going to pay rent for 3 months isn't practical if you're going to force their hand. But maybe it's 50% rent for 3 months and then 75 and then 100%. So always seek guidance from experts on what your options are and talk to your landlord. Take immediate action. Don't delay or hide from an issue. It's not going away. It's like, it just doesn't disappear overnight. It's there. And so if you know a situation exists, deal with it and take action now while you've got time and while you've got options. Anne, do you want to speak about group purchases real quick?
Yeah, I do. And just one point to your last slide about leases. We have an amazing couple of speakers that are going to be featured on Thursday. Alan, if you wouldn't mind putting the information in the chat window. It's specifically about negotiating leases, and we're going to have we're going to feature an attorney as well as a broker that specializes in leases and lease negotiations. And so I definitely recommend that you participate in that training. You can hear it from the horse's mouth, all the tactics that they use to successfully do that. In terms of group buys, when I had my store, and this really works in a retail environment, maybe not in some others, but distributors' costs a lot of times for retail stores can be slightly higher than going direct to the company. And so the difficulty with, with being able to go direct to the company is typically minimums and being able to meet the minimums. In my case, when I was looking to save money, what I had done with my store was I had found other business owners in a similar field outside of my area. So I wasn't in competition with them. I had a store in Eureka, California. I partnered with a store owner in Santa Rosa, a store owner in San Jose, and a store owner in Crescent City. And all of those were far flung from my location, definitely not competitors. And what we would do is we would go in and purchase from the wholesalers as a group. I would maybe purchase for the whole group on something that would be, you have to buy in quantities of 100, maybe quantities of 25 is really what I could foresee my business being able to go through. Reducing the money that's on the shelf in terms of inventory was a lot easier, allowed me to carry a lot more products and a variety, in particular for those customers that wanted all the newest, latest, greatest stuff. So, and in fact, not only did those other business owners become my good friends, but they also became kind of people that that I would bounce ideas off of. When I would have a problem or a solution, we would, as a group, share and really develop kind of a support network. Whereas previously, I probably wouldn't have done that if I hadn't needed to. So definitely it was a very good tactic for me in terms of saving money. And if you've got a retail store, I would recommend checking into it. It obviously doesn't work for those companies that require you carry an entire line in order to be featured as a store. But for those others that you can get away with it and avoid the higher price of the distributors for the smaller purchases, it's worth it.
Great, thanks, Anne. Next, and we're wrapping up here some of the practical strategies, but last few are Review your financials on a daily basis, is and hourly if you need to, but on a daily basis is what I would recommend. Is that frequency and that constantly staying up to date. Finances, just like business, just like life, is a very dynamic situation, and the facts are changing, moment by moment. So that ability to establish a daily habit. I do mine first thing in the morning, run through all my financials, readjust everything, input new information, stay constantly updated. So the more focus, the more attention you put on it, the frequency of it. Don't obsess over it, but if cash is tight, I would say check it on a daily basis. And one final tip is that for those of you that run QuickBooks or really any form of accounting software, you know that the outputs, the report, the information that you're looking at is all contingent upon the information being accurate that's input. So make sure the information you're dealing with from a financial point of view is indeed accurate. Be honest, subjective, and hyper accurate about your money. This is a time to kind of just get the emotion out of it. I know that's very difficult, especially when things are tight. It's a stress response, and stress tends to kind of make our creative thinking very, very small. So step back, be honest, look at it objectively, and be hyper accurate about the money. It's a good discipline and it's a good approach. Talk with your financial partners, your bookkeeper, your CPA, your banker. These are all resources that are experts that can help give you insight and information and assistance. So any financial partner that you have, reach out to them, tell them your situation openly and honestly, and seek their advice and counsel in terms of options that you have. You'd be amazed at what can happen. And lastly, seek quality and free business advice. And insert shameless plug for SBDC. There's a lot of great advice out there. The SBDC offers free, advice to small business owners, organizations like SCORE, local economic development agencies. There's a lot of assistance out there if you actually open yourself up to it. And it's amazing the quality advice that you can get from SBDC advisors, SCORE advisors. I hang up the phone with an SBDC client that has paid no fee for that hour. I'll get on the phone with one of my tech clients in San Francisco, and they're going to pay a big hourly rate for the same quality of information. So it's a great resource. Both the SBDC, SCORE, and any other high quality organization that's offering advice and counsel, reach out, get their assistance. And lastly, I just want to end this section before we move on to some of the more technical financials, is be kind to yourself. Nobody predicted a pandemic. Nobody could predict this. So whatever's happening in your business right now, it's not your fault. It is, nobody wanted it, but it happened and you got to deal with it. Okay. So that's your role right now as a CEO and a founder and a leader of your business, is to just shake it off. Realize that it's not your fault. It's a global pandemic. And now your task for you, your community, your business, your employees, is to navigate the future. All right. So we're going to end with the last section, which is talking about our cash flow forecasting template, and I'll share that with you in just a moment. But a bit of perspective, so before we talk about that, is this is a disclosure you'll see on any projection, which is all forward-looking financials are based upon a series of assumptions. So when we overview the cash flow planning template, realize that is a forward-looking tool, and the quality of the information that tool is going to be giving you is based upon the assumptions that you make. And so the higher quality assumptions, or the more reasonable and realistic assumptions you make, are going to make the information that model is providing to you even more accurate. So realize all financial projections are wrong, but we want those as quote unquote accurate as we can make them with the information we have in the moment. So super brief, just high level overview of the big three financial statements that all businesses use, whether it's a small coffee shop or Boeing, is basically you have an income statement, balance sheet, and cash flow. So just very briefly, an income statement really talks about the key core business model, which is revenue and expenses. And that's the heart of your business. That's your business, is shown in the income statement, revenues and expenses. The balance sheet really talks about assets and liabilities. That's an important consideration to understand what you owe, an important consideration of what you own in terms of an asset. And also the timing of that. Is that a short-term asset? Is that a long-term asset? But it's not as critical as the income statement because it doesn't represent the core of your business. Cash flow statement is really a measure of liquidity, the cash moving in, the cash moving out, and the liquidity available at any moment. That is also a key statement. So I would say of these two, the income statement, the cash flow statement are the first two statements I would look at in a tight situation. So if we think about the income statement from a business owner's point of view, is you've really only got three levers you can pull. Typical income statement is revenue, cost of goods. Gross profit is simply a mathematical calculation. You've got your expenses and net operating profit. Net operating profit is just math. So really the only three levers you can control is the amount of sales that come through the door, the direct costs of labor and materials to produce those sales. So a restaurant, it's primarily the food costs. If you're a service-based business, your cost of goods would be very low. And then your expenses. So those are the three levers that you can pull as a business owner related to your core business. So here's the problem with what I call rear view mirror financials. So if we look at a QuickBooks report, if we look at tax return, if we look at any type of report generated for a business, it's all looking backwards. And that's great. It's important information. It helps you understand, the probability of certain events in the future occurring. So one of the most important things I do with the business owners, I say, hey, send me your last 12 months of the income statement, profit and loss, by month. Let me see the trends and let me see what's going on. That can help me help you predict the future. But while that's informative now, still, the whole situation has changed. And so we can't count on looking in the rear view mirror as a good predictor of what's happening in the future. So we need a tool that's actually going to look in the future. So having the ability to forecast what revenues, expenses, and cash flow will be 1 month, 3 months, 6 months, 12 months from now is the most powerful tool you can have. If you've got a problem and you have 6 months of advance warning of that, that gives you 6 months of time to navigate that and deal with it. 3 months is good. 1 month is getting thin. If that problem just shows up and you're like, hey, I got a bill that needs to be paid and there's no money in the bank, you have no time to react. So your ability as a business owner to project financial events on a forward-looking basis is, in my opinion, one of the most powerful financial tools that you have. So what's really needed is a simple tool that will help you predict your cash flow both now and in the future. So what I'd like to do is to just share with you a cash flow forecasting tool. And Alan, can I get a quick check? Can you see my screen?
I was nodding. Yes, you were muted. Yes, we can see the screen. It's great. I was muted.
Okay, that's perfect. So I'm going to zoom out, which is this perspective, and then I'll zoom back in. Is what I want to show with you is like, this is a month. So this is May. And then this forecasting tool goes all the way for the next, literally in this particular example, about 10 or 11 months. So this tool is all forward looking, okay? And it's month by month, and you'll see it has a very similar structure. So now what I want to do is actually kind of zoom in and let me kind of take you through the tool. So we're just going to take a typical month here, and I'll kind of walk you through it. And here's the good news: is this is a tool, but the concepts here are very usable and practical. So you begin any given period with a certain amount of cash in the bank. Now that could be $1, it could be 10,000, it could be 100,000, but you begin a certain period, typically a month, with money in the bank. Okay. So as we go through that month, cash comes in the form of revenues, okay? So this is an example from a restaurant. So, you know, they have typical revenue categories: dine-in, takeout, delivery, ready to go. So for each of your businesses, you track your revenue categories in a different way, but at the end of the day, it's all the same. Money comes in from sales. So if we take the cash that came in, or the cash that started the period, with the total amount of cash in, we're going to have a total amount of cash in that month of, in this case, $20,000. Now, what we also need to do is start looking at the outflows of cash. So that's the inflow of cash. The outflow of cash happens with cost of goods, restaurant, retailer, etc. You're going to have hard cost of goods, and then all of your expenses. So what takes away cash is primarily cost of goods and all the expenses that you have. And this is just a sample view of expenses. Okay, this is for a typical restaurant. And so what happens is it's basically math. Okay, so if you take the amount of cash that's in the bank when you start the period and you add the cash in from sales, that's going to give you a total amount of cash for that month. And then essentially you deduct the cash out for expenses, and then that's going to leave you with ending cash, okay? And what's powerful about this model is that, let me give you an example. Let's say that we find out that we've got to pay some permits, okay? So let's say that that's $500. I want you to watch what happens to cash out and ending cash. So as soon as I input that expense, total cash out went up and ending cash went down. And actually what happened is that change was affected every month all the way to the very last month. And so what this tool allows you to do is to essentially input information, and the tool is automatically recalculating not only that month's cash position, but all future months in that model, all the way down as long as the model runs. The nice thing about this model as well too is if you know that you have a bill, let's say it's taxes, due in 3 months, you can input that. Let's say it's $1,000, and watch what happens to cash out. It's going to go up, and ending cash is going to go down. So you can actually input expenses that you're aware of in the future, as many months as this model is built out, and understand and predict what's going to happen with cash flow. And this particular tool can be customized, so you can change the categories, you can add different expenses, and every input that you have is automatically going to recalculate the ending cash. So you now have a crystal ball to essentially look and see what is my ending cash position. And let's say that, hey, great, I'm going to get one more example, and then we're going to wrap here, is let's say that my rent is going to be cut in half. Watch hang on just a second. Total cash goes down. Excuse me, total cash out goes down that month, and ending cash goes up. So I'm just going to kind of wrap here with, there is a tool, there is a way in which you can input your particular revenue streams, your particular expenses. These can be customized. You can deal with variable expenses, fixed expenses, expenses that occur only in a certain given period. And you now have the power through this tool to not only know what's happening with revenues and expenses, you can do what if scenarios. Let's say that we add a certain revenue stream. What happens to the cash flow? Let's say that we reduce an expense. What happens to the cash flow? There is a tool, there is a way. It's very simple to implement this system and input your information and truly now have a tool that you can use to understand and predict and forecast cash flow. All right, so I'm gonna stop here. All right, so that's a wrap in terms of my content. I hope that was helpful. I've used this to, I am a chef that eats my own cooking. I use this template for my personal financials, and I update it every moment that I'm aware of financial change. And it has been, personally speaking, one of the most powerful personal financial tools. I've used it for several businesses. The businesses that have adopted it have had remarkable success. So anyways, I'll end with cash flow is critical. You can do it. It is within your power, and there's tools and advice to help out.
Great, thank you so much, Paul. We've got a few questions. I want to make sure that we start to answer them, but I'll just say that we are going to make the tool available to everybody. It might be coming after the training today. The cash flow tool is currently a PDF of the worksheet, but we will we'll figure out a way to get the editable version of it to all the attendees today. So I'm going to just start with some questions for you. Layla's asking, eliminating non-mission critical expenses doesn't include eliminating advertising and marketing though, right?
100%. That's good money because that drives revenue. The only thing I'd say though is that you need to be efficient. So there's an old saying that half my advertising budget's wasted, I just don't know which half. And so what I encourage a business to do is to relook at their spend for advertising and marketing to ensure that the capital is being deployed in the most optimal manner. Yeah, but I'm a big fan of marketing and advertising expense.
Moira is asking, how do you reconcile your projections with your actuals?
Yeah, so what happens is this is a hybrid tool. So it's not QuickBooks. It's similar to this. This is a tool that combines both cash flow and revenues and expenses. So what happens is as the information, so let's say you're in the template for the current month, as expenses go from forecast to actual, the template can adjust for that. So as the month goes on and you pay expenses, the template automatically updates all that. So I would say this is not a replacement for QuickBooks. Your CPA is not going to use this to do your taxes. This is a tool that a business owner can use to help he or she predict forward-looking cash flow.
Okay. Pardon. Let's see. They're asking, do you have an Excel spreadsheet for cash flow that we can use?
This format is in Google Sheets, but it can be easily exported to Excel. What I will share with you though is if you are given the link to the template, it may be self-explanatory, but what I recommend is reach out to an advisor. I recommend reaching out to an SBDC center, get on board as a client. We have advisors in every center that are experts in financials and cash flow, and they can assist you implementing the template. There's just a touch of learning curve, but once you get it, it's pretty slick.
Kathy is saying, is it better to break out items by expense or put in credit card payments? I pay off cards each month.
Yeah, so this tool is a hybrid and it's designed to look at cash, okay? So it doesn't line up with GAAP standard accounting in terms of how an income statement is done. So you would actually input the entire credit card minimum monthly payment. So really, if you think about it, if cash comes in, this template recognizes it. If cash goes out, this template recognizes it. So any cash coming in or out in a given period is able to be used on the template.
Okay. Matthew's saying, I love to pre-schedule bill payments online, but I always choose a date on or one day before the due date. That way I don't forget to pay and keep the cash as long as possible. You'll find that a lot of times it won't let you automatically schedule those ones that are close to the due date. There's some sort of a hiccup in their system. They specifically don't want you to wait until the last minute. So that's one thing that some of the companies that you work with, you might have to be aware of.
And real quick is just as I'm encouraging all of the participants to play the cash flow game, all businesses are playing the cash flow game. So be aware of when the game's being played on you, and it's game on at that point. So.
Shankar is asking, what does cost of goods sold mean for a layman like me?
The technical definition of cost of goods sold is direct labor and materials related to producing the product that you sell. So for example, in a restaurant, the direct cost would be the food costs, the packaging costs. For a retailer, let's say that you run a fashion boutique. The cost of goods would be all the inventory that you purchase to then resell for a profit. So cost of goods is the direct materials and labor costs needed to acquire the thing that you sell.
Okay. Somebody's asking, have you heard about a company like plastique.com from the payer or recipient perspective?
I'm not.
Okay.
I'd be curious though.
I haven't either. So anyway, Hugh is saying, I'm taking advantage of an idle loan to refinance a business credit card, but I still need to reduce bank loan debt and have something left over for inventory. I have orders I can't fill. Can these cash flow projections help negotiate debt or debt interest with banks?
Possibly, but more importantly, it will provide you as the business owner a tool. Remember, one of my strategies was everything's negotiable, but be clear and specific in terms of what you need. So this model will allow you to project forward, understand your cash flow position, change the variables, and understand, okay, I need exactly this change in my bank monthly payments in order for me to hit the cash flow projections I'm looking for.
Okay, great. Wendy is asking, how much does it cost? Is the tool for free to download?
Yes.
And Wendy, our services, the SBDC services, and Paul, expert advisors like Paul, they are free to you, but they're not free. They're paid for with your tax dollars. And we are very happy to provide these all for our attendees and our clients. So please don't think that there's ever going to be a charge for working with the SBDC program. Let's see, we're right at 11 o'clock. I'm gonna stay on for like just 5 or 10 more minutes for those people who wanna hear the rest of the question and answers. Is that okay with you, Paul? All right, great. Let's see, Martha is asking, is there any help for a home office business? We pay our mortgage, but they're not willing to help. I'm not sure what specific.
Well, one thing too, all SBA backed loans typically and mortgages are subject to forbearance programs. So I would, if you have an SBA backed loan for a business, if you have a residential mortgage, absolutely contact your lenders, ask what programs they have available for forbearance or payment assistance. 100%. And they have default programs, and then beyond the default programs offers, there's always negotiation.
Donna is saying that she's looking for help with reducing expenses, and how do we recommend to get that help? Please go to norcalsbdc.org and apply for services. Type in your zip code and look for an SBDC office near you, and we will get in contact with you, ask you some more questions to help get a feel for what it is that you need and how we can help you. And then we'll match you up with an advisor if it's a good fit. So absolutely, please come and work with us directly. Anil and one other person was asking about credit score. only personal credit scores can be found from services like Credit Journey or Credit Karma? How can we get our business credit score?
Yeah, I would say this. I was an
SBA
SBA lender for years. I deal with SBA loans on a daily basis with clients. By and large, the founder's credit is still the #1 factor for credit scores. There are business trade line reports, D&B, et cetera, but I would say that it starts and ends for most small businesses with the founder's personal credit scores and their personal financial statement, as well as any owners that have 15% more interest in the company.
We have somebody who's wanting to work with you in person.
How about Zoom?
Hugh, definitely send me an email. My email address is acj1@humboldt.edu. Our host institution for the NorCal SBDC program is Humboldt State University. I'm happy to see what we can do to help you get signed up for services. So Suzanne's asking, this is an example for cash-based businesses. Is there a template that deals with ongoing receivables and payables that you've used?
Yeah, so that's accounts receivable, accounts payable. That's a great report, AR aging. At the end of the day, though, a accounts receivable report is usually structured by 30, 60, 90 plus. And if you have a good accounts receivable aging report, you'll understand the cash that's due to come in from any given invoice in any given period. And this could be plugged into the template. Businesses that have very complex AR, a lot of different invoices out, the template, it gets a little bit, it's just difficult, it's more complex, but yes, it can be done.
Sean is asking if the cash flow tool can be integrated with QuickBooks somehow.
No, this is just something I did on Google Sheets, so it's.
Okay.
Yeah.
So anybody who's making a change based on actuals, mid-month when they figure out, okay, well, my bills are looking a little bit different this month, or it looks like sales are looking a little bit better than I had anticipated or worse than I had anticipated, that's when you put it in the system, correct?
Absolutely.
But you have to do that manually. It's not.
Yeah, this is a manual process, but as information changes, you can update the template and it'll automatically recalculate the ending cash position for every month.
Okay. Are there SBA loans for a startup for COVID fighting tech to scale up?
SBA loans and startups has always been a difficult conversation, even more problematic now because businesses have always had a bit of challenge working with startups from a lending point of view. But if you slap a uncertain business environment on top of that, it puts the lenders in a very difficult position to make a loan for a pure startup. But there are certainly financing options for startup. That's one of my specialties. So the SBDC can help with that as well.
Dawn is asking how she might be able to predict revenue in a service-based field. Did we answer that one already? Service,
product, all the same. You know, I'm a consultant. I provide services. I do my own revenue forecast. So that's actually fairly straightforward.
Okay. When do you recommend using accrual versus cash flow in QuickBooks?
Yeah, so accrual would be recognizing the financial transaction when it occurred rather than when the cash comes in. So my personal recommendations for all small businesses is to convert it to a cash basis. And this template is really designed for a cash basis. What it means is in any given period, it doesn't discriminate. If cash comes in, it recognizes it. If cash goes out, it recognizes it. If it's a service that's delivered that month, but the bill's not due for the next month, it's only when cash happens in or out that this template is correct.
Okay. That is going to be our last question that we answer. Thank you all so much today for participating. Thank you, Paul. some great feedback in the chat and Q&A about the presentation. So looking forward to working with you further. Please do tune in to our workshop on lease negotiation that's happening on Thursday. We are happy to help in any way we can. Contact your local SBDC and have a great rest of your day. Thanks, everybody.
Thanks, everybody.